Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, traders and investors. Welcome to this Tuesday, March 28th edition of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Elconin and Dennis Dick. As always, on the show today, we're going to talk about this Tesla news from this morning. They got a passive stake. Stock is up on that. Cara, going to talk about that. Saro has some news as well. Also, Joel found an interesting stat. We've actually been in an 8-day slide. If you look at a certain index, we'll get to that and what that actually means, which if you ask them, they'll probably say not much at all. Two guests on the docket today. We've got Nick Shaheen, as we do every Tuesday. He's our options guy, the author of Create Income with Option Spreads on MarketFi. And then at 9, we're going to be joined by Bob Wire, listener from the chat, who you hear mentioned frequently, very active listener in the chat. He's going to stop by this show and talk about his trading as well. Joel, how are we doing the S&Ps this morning?
Not too good here. We've rolled over a little bit. We hit 23.44 overnight. That was a couple ticks shy of Friday's close. Below the close, pre-market low 34.75. Hard to find support here as we swoosh through the 20 and 30 handle yesterday. As of right now, no continued downside until we take out the pre-market low of 34.75. You have May crude oil trading in the green by 56 cents. Let's pull up the daily chart of the crude oil. Take a look here. See if we can find out anything, any good levels. No, not really. Maybe come back into that psychological $50 level. Actually, the last 2 days we've stalled here in the lower 48s. We'll keep an eye on that. Major support at 47. Crude or gold and silver mixed. You have gold trading up 40 cents and silver not even down a penny. So Dennis, 8-day down days in a row.
Certainly, that's unbelievable.
Yeah,
I did not know that. That's in the Dow?
That's in the Dow. Yeah, I had to keep searching indexes until I found it because I automatically knew it wasn't the S&P that was down 8 days in a row. So, yeah, that has to be the quietest 8-day sell-off in the history of the market.
For real. How much are we down on the Dow? Because you know how much I look at the Dow. I don't even have it on any of my quote screens. I mean, I have 200 stocks, my quotes. I have ETFs, and I don't have the Dow as one of them. That's how much I care about the Dow. But how much is the Dow down from the highs?
All right. You hit an all-time high at 21, let's call it 21,170. You got down to 2,400. So, yeah, 600-700 point sell-off. But
we're 700 points off the highs right now in the Dow?
Yeah. Yep.
I didn't know that.
Yep. We hit a high.
So how much are we off on the S&Ps? Give us the highs on the S&Ps. I get so in the short-term trading, you start forgetting, a little longer-term look here sometimes helps.
The high was 98. We're at 35. So, a little bit less than 60 handles off the high.
That's not. So we got 3-4% we've fallen off the highs here.
Yeah,
quietly here.
It's just been such a grind,
Sleepy. Yeah, it's been a sleepy sell-off here, too. I mean, we've had some whipsaw action. We've had some falls. We obviously bounced back a little bit yesterday. We'll talk about that in a second. But it's been you're right. It's been a quiet little sell-off, really.
Yeah, and they want to publicize that it's down 8 days in a row. I mean, you just had the big drop yesterday, but good call by you yesterday. You thought, I mean, even if you couldn't pull the trigger on the long and you wanted that big down open, I mean, short in the hole would not have been a very rewarding experience.
I mean, that's just it. You come in here, you're fighting, this market. And even though we've been down 8 days in a row, you got to put it in perspective. This seems like it's still the buy the dip market. And it's difficult to, short. And when you come in and you're going to short when the S&Ps are down 20 points, I've lost a lot of money in the last 7 years doing that. And that's why I was like, I'm more prone to buy this, dip than to sell this dip. And obviously, that worked yesterday because a lot of stocks actually, the buy the dippers came in. I mean, you can say whatever, we've been down how many days in a row, but that was a buy the dip open because you look at this chart like Bank America, which we talked about yesterday, that opened right near the lows down at 22 and a quarter, bounced up, obviously closed near the highs at 23.03. It's actually trading flat here this morning, besides the S&P is being down a little bit. JP Morgan opened down near the lows, it bounced. So you saw the big bounce in the banks, but then you saw the bounces and everything too. Stocks even like Caterpillar opened up near the lows and bounced. It was just a classic come in, buy that morning dip.
And just, I've tried to emphasize this on the show here on more than one occasion, but you had a pre-market low. All that trading they did overnight, right? They got 1775 as the low. That would be 1775. And then they tried to bust it early in the session. They took it down there, turned away at 18 even. So your buyers out there overnight at 1775, stepping ahead of that level. Lower risk buy if you were trying to pick a bottom. The fact that the pre-market low was not breached.
Stock Hunter talking about stocks like U.S. Steel and CLF being significantly off their highs, and he's right. Look at, we talked about U.S. Steel, and it was one that opened up near the lows as well yesterday. If you look at the chart, it opened up under $31, and it ran throughout the day as well. And you wonder if that wasn't like a little bit of the capitulation open that we've been waiting for here. I would, mark on a lot of these stocks here now where those lows were from yesterday, and that would be my bogey now. So if I was coming into a U.S. Steel, and let's say it pulls back to the 31 handle, I would not want to see it breach the 3073 low from yesterday. That's how I'd maybe be approaching some of these stocks. He's also talking CLF, Cliffs Natural Resources. That thing has been killed here in the last month. It was up over $12. It got under 8 yesterday, but again, it kind of felt like capitulation open yesterday. And how we define capitulation is much different than we did back, in 2007, 2008 when you have 1,000 points down on capitulation. Now we get a triple-digit down day. S&P's opening down 1%, and it feels like capitulation, and it kind of was. So here we are, we're right back on CLF. It had a nice bounce off 775, rally 50 cents. So, yesterday was, despite being down, like you said, Joel, was actually a pretty good day for the market considering where we were.
Yeah, and MLV Bespoke tweeted last night, only the second time in history the Dow's finished down 8 straight days, but the loss was less than 2%. And I think
That's incredible.
yeah.
When you think about that, you can be down 8 straight days, and that just shows how much volatility in the VIX is, quiet there. And, as a trader, I hate it. I would love, I love 8-day down days as a trader because I'm usually, I don't know why, just over the years, I guess, say 18 years, I always like to short stocks more than I like to buy stocks, probably because they usually go down a lot faster than they go up. But, in the last 7-8 years, this has not been the case. This market, you've been fighting it if you've been trying to short it. And I'll tell you, though, through my 17-year career, I can't remember 8 straight down days and only having a 2% loss in the market. That sounds insane.
Just looking at X here, open 31.15. So if you bought that open, you were like, oh no, it prints 30.73. But if you go to your dailies, you could have found, okay, well, we did have this low at 30.71. February 1st low, so that coincides nicely. But
really nice.
Yeah, just another trade though where, okay, hands off on the open, right? Because you don't want to get flushed out there. But once you came back through that opening print of 31.15, didn't even dip back under $31. So that's just another potential strategy in using the open. Today, if you're looking through follow-throughs on some of these issues you're taking, number one, they got to stay green. Number two, they got to take out yesterday's high. And with the way the S&Ps are acting right now, Dennis, I think we're going to have a hard time, getting back over 2340 and getting green. Just too much of a rally yesterday for people just to be piling right back in.
I don't know. I know we're
Really?
down here a little bit this morning, but I think we can go green again here
Go
too.
green
So
or close
without
green?
even looking at the S&P chart here, just the feeling yesterday, how I like my 2-day move. That was the first kind of, and I know it ended up being a down day, but it still felt like a green day because we were down so much. So we can get above, if we can get above yesterday's highs in some of these stocks, and look at the stocks like Bank America, they're, kicking around. They're not down much here this morning. So I'm not just jumping back on the bear train here. I'm going to stick, not fully bullish here, but cautiously bullish. And what I want to do is see some follow through. And like you said, let's see where these stocks open. Let's see if there's a little flush. And if they get back up over where they open, then I'm interested. And I'd love some of these stocks to get back up over their highs from yesterday, because then I'm really interested in the long side. So that's kind of where I'd be looking to go long, is if we can start getting above the high from yesterday's on stocks like JP Morgan, which was the high was 87.40. So that would be my bogey on a stock like JP Morgan. So I'm hands off on the long side until you can get back up over those highs from yesterday, and then I'd be, it'd be, going for the 2-day move.
I think going green and closing green are two different things. You don't want to go all the way as to wager that we're going to close green.
No, I'm
Okay.
not going to make any wagers here, because this is, like I said, I'm cautious. I'm not very conviction here. But as traders, it's all about the setups, eh? It's all about being prepared. And, from the long side, I'm not going to make any trades unless these stocks can start getting above their highs from yesterday. But when they get above their highs from yesterday, that's when I strike. You don't have to pitch. You don't have to swing at every pitch they're throwing you. They're throwing you curveballs, but throw me that pitch up the middle where I've got stocks, getting up above their highs from yesterday, and then I'll get interested in the long side. So, always, you don't have to make every trade, but being prepared is the whole key to making money in the markets.
For Fuzzy here, who's just we'll do quick technicals on AT&T and British Petroleum.
Sure.
AT&T, I mean, good support and good resistance. Three lows just at the 41.50 area. Classic AT&T, and looks like you got a seller at the point at 42, even though the one high above and two below it. Nice little range there. I don't expect AT&T to go anywhere until you can break down below 41.50 area or above 42. Dennis, when does AT&T go ex-dividend again? Do you have that in front of you?
No, I don't. I could probably find it. Let me just
Okay.
go see, actually. I'll try to. It's 4.7%. I'm trying to grab the ex-dividend date. It looks like April 6th, actually, so it is coming up.
So
Is
what do
that
you?
right? Have we already went through the whole thing that quickly? Does it feel like that long ago? I thought it just went ex-dividend like a month ago.
No, it's been longer
I
than.
don't,
No, no. I think. I mean, if you're
you
seeing
think
it,
it's right? So is
yeah.
the gap down? Basically, we're looking back at early January,
Yep.
probably in the charts where the stock went from. You can see the gap in the chart. That was probably the ex-dividend date. So yeah, it's coming up April 6th.
Yeah.
And we know AT&T likes to run up ahead of its ex-dividend date. So there you go, Joel. Good call by you. We're only about 8-9 days, and this typically does run up a week or two ahead. Now AT&T just has this whole counter market move always going on. I mean, when the market gets stronger, it seems to get weaker. It's like, it was the same thing yesterday. Market got killed, and actually I made some money trading AT&T yesterday. I bought the AT&T in the pre-market there, and it went, straight up like 20 cents right from where it was. It did come back down, but I was able to sneak out of that one pretty good right near the high. So, sometimes going to counter the market with some of these defensive names sometimes works.
And just what it did on that last pre-dividend run here. Does you want to explain that a little bit? Let's just go back to the AT&T and do a little education here on why you see such a. I mean, not always, but you see a run up in these high dividend paying stocks.
Well, because obviously, if you're in the stock before the ex-dividend date, you're going to get the dividend. AT&T, it's such a significant dividend. I believe, is it 51 cents? I don't have that in front of me either. I know the yield's 4.7%, but I think the dividend is like close to 50 cents. So it's significant. So, you have institutions that, if they're thinking about buying a stock, why not buy it ahead of the ex-dividend? So, if you're thinking longer term, even, I'm going to hold it longer term. Why would you not buy it before the ex-dividend date and get that dividend as opposed to buying it afterwards? I guess you think you're getting it cheaper, but it's nice to get paid too. So, and even just retail traders or shorter term traders, they like to get paid the dividends. And there's dividend capture strategies out there, and those start typically a few days before. But for some reason, we see in AT&T and Verizon, it's just looking quantitative analysis. We often see it showing some strength a week or two ahead of the ex-dividend date, and it shows weakness for at least a few days after, and sometimes a week or two after. And it's classic last dividend report. You can see the run up in December. And sometimes it's to do with the market, but a lot of times these stock charts look different than the market too. And then you can see afterwards, AT&T was straight down after the ex-dividend date, like significantly. Like we went ex-dividend, stock was 42.85, within 3 days was down at 40.85. You can say, whoop-de-doo that day, $2 move. AT&T, $2 move in AT&T is huge. You're
Yeah.
talking about one of the thickest, most widely owned stocks in the USA. So when you see this thing fall 2 points, it's significant.
And where else are you going to get 5% overnight? You know. on your money.
Well, you get 1.1%
Right.
overnight,
Yeah,
yeah,
one
because it's
percent.
quarterly. But still, it's just a lot of people are in these things. I mean, the majority of the investors that are in a stock like AT&T are in it for the dividend. I own AT&T in my investment portfolio, and I usually, do the dividend capture strategy with it as well. So sometimes before the ex-dividend date, I'll own a little bit more, and then I usually sell it afterwards. But AT&T, where do you get 4.75% dividends
A
in
year.
this market? And that's safe. AT&T, it's been paying this dividend forever. I mean, it's safe. People are still using their iPhones, so and their their smartphones there. So I don't see AT&T's dividend being in jeopardy, and that's why you have a lot of people who are in this just for the dividend, and that's why ahead of the ex-dividend date shows strength, after the ex-dividend date shows weakness. Same exact thing with Verizon.
Question from RD: how far do these run down after the fact?
It's just obviously we don't live in the absolute, so there's no way to answer that question. But I can just say it typically shows weakness, for a few days afterwards, at least a few days afterwards, because you have people that are getting out afterwards that they don't want. They were in there for the dividend, and now they don't want to wait another 90 days to get the next dividend. You have a lot of probably in even short-term investors that want to own this a few days before and get the dividend, get paid, get out, and I'll buy again in 80 days when I'm going to get paid again. Why am I going to sit my money just in there for 80 days not getting paid? So that's kind of how it works, and it doesn't always work. But like I said, as a trader, if you have an edge that works even 55% of the time, you'll make a lot of money with that edge. Casino's edge is like 51, 52, 53%. But you keep playing it again and again and again, over the long run, you'll make money with it. And I usually typically play the ex-dividend, strategies around AT&T or Verizon, and it's worked very well for my trading career.
I wouldn't say so much like how many days. I would just kind of keep an eye on like the technical formations. You can see AT&T afterwards had one, two, three, three down days. Put a little double bottom in AT&T, GE, those
Yep.
kind of stocks. So hey, if you're waiting after the ex-dividend date and it falls pretty, wait for a double or triple bottom. At least you can identify where buyers here. So if you did pick it up at 40.70, 40.80 on this bounce, you know where there were buyers. So if you want to stop yourself out, and then really went on a tangent here. The dividend in British Petroleum is 6.85% yield. The reason I'm just not as thrilled about this one, I just don't like the way the chart looks. I'm just unsure about oil. I mean, you can see major support here just above 33, but until it breaks out of this 33, 34 and a half trading range, I mean, I guess you could sit and get paid, but there's
I've been
more.
sitting
Yeah.
getting paid. I've had BP in my portfolio ever since the whole oil crisis there. So it's been okay for me. I'm in here right in the mid 30s, and I have been getting that dividend, sitting, getting paid. And I've got like 70 stocks in my investment portfolio that I just sit on and I just get paid. And I'd say 80% of them, at least 80% of them, are higher dividend plays like that. And I like getting paid, especially in a market, that doesn't go anywhere. If you're getting 4 or 5%, like a 5% or a 7%, I like getting paid in BP too. I will tell you though, BP is a lot more risky than AT&T. I'm more comfortable with my AT&T position than I am with my BP position. But, it's oil exposure. This is more related to oil, still the chart of this, than it is obviously, to the dividend. And I don't know, 7.2% they've been paying it for a while. I think it's safe right now, but I'm more comfortable to say that AT&T dividend is safe than the BP dividend.
Yeah, remember when they had that oil spill and on CNBC they had that underground camera just with the
You
oil?
just seen it leak and leak. That
Yeah,
was crazy.
yeah,
I
that
mean,
was.
and the stock has never recovered from there. I've had people say, "Oh, but it came back." Yeah, it did. You can see in 2010 it came all the way back, but now we're right back to where we were before. So we went from $60 to under $30 with the oil spill crisis. We actually went back to over $53 back in 2014, which I should have sold then, but I never did. I've held it the whole time. And but it's right back here in the 33 area again. But that being said, I've been getting dividends for a long time on this too. Although I believe they cut the dividend for a while in there. So and then they brought it back. So the BP dividend is back though.
And Dennis, what site do you use to check your dividend dates? I mean, you can always use your trusty Benzinga Pro.
Yeah, the Benzinga Pro is always a good place to go. So just bring that in there. Spencer, we can, maybe we'll just do a quick 5-minute segment sometime. We'll bring you in, Spencer, and you can show how to check all that stuff, because Spencer's really good at using this Benzinga Pro. I think we should do a 5 or 10-minute segment sometime, just showing, because a lot of our listeners obviously use the Benzinga Pro, and we could show how to look up some of this stuff.
Super easy. Calendar feature, dividend in the calendars versus dividend calendar feature. Super easy to look up. We can do that. It shouldn't maybe tomorrow for today.
We'll put it on.
Yeah,
So
whatever.
we have 8:15 guests that we
We
went over, or is
no,
8:35?
we 8:35 is Nick Shaheen.
Oh, okay, so we're good. So you're not yelling at me yet. I was like, we're 5 minutes over 8:15 guests. I'm gonna get fired. All right, so let's jump into some earnings plays here because we had some pretty good ones last night, actually. Red Hat reported Spencer, RHT Red Hat, breaking out to new all-time highs here again. What do you got for me, Spencer, on the report?
Q4 EPS of 61 cents. That was in line with the estimate. Sales of 629 million versus 618 million. So they beat that number. They see their fiscal year 17 sales coming in higher than the estimate. 2.71 bill was the estimate. 2.72 to 2.76 is what they see. As far as fiscal year EPS, that's coming in higher as well. Q1 sales coming in higher. Q1 EPS coming in lower, 52 to 53 cents, 59 cents was the estimate for Q1.
That stock is breaking out to a new all-time high. 85 had multiple levels there. It was all kinds of size. I thought there at Red Hat at 85, but I'll tell you, the stock has been trading significant volume here above $85 level. I don't see much in the book. I'm just looking at the book. I only see 15,000 shares at 85, but just with all those tops there, you wonder if there wasn't some more size kicking around there at 85. But it's traded enough volume above 86 here. I think it's probably going to open over 85. I mean, that would be the bogey. If it didn't open over 85, I would be concerned. But as long as we open over 85, bulls are in charge. It's been hard to fight some of these stocks. You know, we saw similar companies report and they've run here. I mean, even Oracle, and Oracle's obviously not exactly like Red Hat, but just saying how much, some of these stocks can run on the earnings reports. Some of these tech stocks can really go, and Red Hat is one of them.
When I was looking at this report here, it's sales are better, EPS is better. They kind of got a break because for Q1 EPS, they actually gave a little bit of a lower range, 52 to 53 versus the estimate of 59. But I guess the fact that the fiscal year overrules that little Q1 blip. Pre-market high 86.88, backed off, still holding up in the $86 handle. That former area of resistance should act as support, but if you're looking for big follow through, you want to see this thing in the 87 handle, clearing that pre-market high very quickly. If not, I'm looking for some back and fill.
Jumping over here to DRI, Darden Restaurants, the Olive Garden slash used to be Red Lobster, I guess. DRI trading up significantly here in the pre-market too. It was supposed to report this morning, but actually reported last night. I'm lucky I didn't. Sometimes I actually trade these things after hours before they report, and I was not in this one, but I saw it getting bid up. I was like, who's bidding this up? And I was like, oh, it reported. I was like, yeah, I better back off on if I'm going to be trading that. But DRI here trading up significantly in the pre-market. It's 78.75, which is up 3 points. Spencer will give you the details on the report.
Well, it's because they had a Q4 EPS of $1.32 that beat by 4 cents. Sales of 1.88 billion versus 1.87, so they beat that number 2. Same store sales, they see going to be up 1.5% for the fiscal year. They reported Q4 comps also up about 1%.
I'm torn on this one. I think 78 is going to be a bogey here still. I see 30,000 shares in the book. It's early at 78, and that means, when you say in the book, I'm saying the New York book, and that liquidity doesn't become active until 9:30. So they have to, open, at least over 30,000 shares to get above 78 probably. It's traded some volume here, but I'm just concerned that grows a little bit too. So I think 78 is still a bogey for this, and I'm concerned it might not open over 78.
Then get in there, Dennis. 78.75 pre-market high. I see 79.25 on one platform. I see 80 on the other. It looks like someone's actually making a stand.
Did they get 80?
I have it on.
Oh, I did see an odd lot right on the report. I do remember seeing that because it hit my filter too. But it was like 50 shares, a very little stock trade up at 80. So
all right, call it 79.25 then, and now we're all forming at 79. This is taking out the all-time high. Oh no, 79.43. So we're right there. I mean, hasn't made a new all-time high yet. So keep an eye on that. And how's this one been doing compared to the other restaurant stocks? I mean, I guess what category would you put this one in? Like leisure? I mean, it's more expensive.
You can look like a Red Robin. You can look at those. You can look at kind of Buffalo Wild Wings. BWLD is obviously sold out, but the only problem is their multiples are much different. Buffalo Wild Wings has been growing. I'd say it's obviously fits into that middle tier. So you're not talking like a McDonald's because that's fast food, and you're not talking the fancy sit down restaurants. Kind of in the middle. So I'd put like Red Robin right there,
What's
or
the
RGB,
symbol?
and it's kind of comparable.
What's the symbol for Red Robin?
RGB.
Okay, because I was just kind of thinking this is moving a little bit different directions than some of the other ones, but charts don't look too bad on some of these. Certainly not at an all-time high like Darden Restaurant. Oh, Red
Two.
Robin, 95 is the all-time high. So I don't know.
That's like
Maybe someone should figure out what Darden
two point
Restaurants is.
eight percent Darden restaurants. It's got a little dividend in there too, and that helps. Those dividend stocks seem to help. So DRI 2.8% dividend.
Okay.
Other stock to talk about here, McKesson reported, but maybe we'll glaze over that one unless somebody wants to hear about MKC. I want to talk about Tesla here because Tesla is up again. This stock is it's just been a monster. I mean, let's put this in perspective. This has been one of the best performers in the last 3 months. Tesla, back in December, was $180. We now had that incredible 2 month run to 280, actually 287. Then it sold off significantly because what typically happens, you got to have a shakeout there, get some stronger hands, and it's starting to march here again. And now we're within striking distance of the highs here again on Tesla. We're up another 5 points here this morning. Spencer, what's the news driving us up 5 points here on Tesla this morning?
Yep, Tencent, the Chinese investment firm, has acquired a 5% passive stake in Tesla. It's about 8.167 shares of common stock. They got that on March 17th.
Big pop here, Joel. What do you think on a
Ah.
stock like Tesla? I mean, you can't even look at traditional valuation or anything on this because if you do that, you're not buying stocks ever like Tesla and Snap. I mean, some of these stocks just get a pass on valuation. You can't think of them that way. You just got to think of it like momentum. And I was talking about this on the pre-market show. I mean, this is the momentum market. And when a stock gets going in one direction, I don't care what the fundamentals look like. If it gets going in, one direction, it continues. These trends are very, very pesky. I mean, if you were on that Tesla trend back in December, January, February, and you just took your purple crayon and drew the line and said, I was going to deviate it, when it got out, you would have run that thing from 180 all the way up to you would have finally got shaken out about 263. But the purple crayon trick from Jeff Mackey back in the day, it works sometimes in these stocks.
And did Tencent, did they consult MC Hammer or Ice Cube before they made this purchase?
10 cent, Joel. I think you're thinking of 50 cent, but yeah, we'll give you the 10 cent.
Oh, okay. Well, you know what? I'm going to reserve comments. Nick Shaheen is coming on here in just a
Oh yeah,
few
this is his
minutes,
baby.
and he
Oh,
did a great write-up on Tesla. And he's kind of thrown in the towel on the short side, saying it's not a car company anymore. You can't value it like a car company. And he actually set up some bullish scenarios that I was going to look at this morning, but trading up $5, the heck with that. You gotta look. No, it's just a good call by him. I'll just tell you the pre-market trading. You snuck over 279 on two occasions. 279.50. That's your pre-market high. When we danced up here before in a yo-yo session, we had a high at 83.45. So we'll get Nick's opinion on that one. Downward Dog has a stock that he wants us to take a look at. He says it's one of his favorite kind of setups. SSNI, Silver Spring Networks, and that had a nice day near the close yesterday. I was looking at this thing on the daily, and man, look at that. 1, 2, 3, 4
that ran.
highs. Yeah. It ran. Look for your 2-day move, clearing the 1080s, then $11, and things kind of open up here. But good patience if you waited on the sell-off here in Silver Spring Networks.
That's a key reversal there. Not only a red dog reversal, but a key reversal where you actually made a new low on the day and then made a new high actually on the day. So SSNI, yeah, that's a nice candle there. I like that candle too. What I want to see again is the stock to get above its high from yesterday. Start seeing this thing maybe break out over 11. You'd be in breakout mode then. So, I like the chart on this one there. I like it. I like candle like that. And I think if we can get above $11, I think there still could be a 2-day move in here on SSNI.
And
SSNI.
And if you do go into reverse here, you have people that miss that 1040 bottom. So I think bids will be sticking out ahead of that. So that's one thing to keep in mind. And not a bad looking chart there. V-Ray, been a hot
Ace is
stock.
talking about that one. Ace always finds these big movers here, these smaller stocks that really move here. He's good at that. And he's right here. VRAY, huge pop there. Got up to 995 there in this morning. It's been trading around 990. Obviously $10. It's psychological level. That is significant here for VRAY. If it can get up above 10, then maybe, it continues this incredible run that it's been on. But whenever you start to get these big psychological levels, you got to be careful.
Did you hear Kenny Glick talking about this one? Did you
What did
listen?
he say?
Well, there was a guy that used to trade in one of his operations, and he had a little bit of a lisp. And there was a guy in the office named Ray. And so Ray was
Oh,
a real
yeah.
good trader and used to say, Ray, what do you think of this chart or whatever? And so when he saw it moving, he just bought it, for the guy in his office. I mean, 10 is a psychological level here. I think I noted how many up days in a row it's had. So I don't know. I mean, it's been a beast. That's how many up days in a row you had. You've had 1, 2, 3, 4, 5, 6, 7. You got the 8-day rule intact. New all-time high here. I tell you, I'd rather be taking profits at $10 and shorting it at 10. So, especially where was your close from yesterday? I mean, instead of keeping an eye on the highs and lows, keep an eye on the closes. 947, that's where it went out. 995 was the high yesterday.
EDIT Ed Parker's asking about this one. This one actually caught an upgrade, or no, it was initiated a buy at Chardon. They put a $65 price target on this thing last night. $65. The stock's at 20.
Oh, I got to go buy
EDIT.
it. Hold on.
So that's
Let's take a break. I'm going to go buy the stock right now.
You're gonna go. I was trying to buy it. I tell you, I was trying to buy it last night. I couldn't. It really popped quickly. It got up over 21. I was like, I don't know. I could have bought it at 21.10. I was like, I don't know if I want to pay up 50 cents for this thing. This thing's up 20. It's at $22 now. I mean, you got to look sometimes on the upgrades and downgrades. You can take an upgrade and downgrade and say, okay, Chardon, you're maybe not that influential. But then you say they put a $65 price target on it. That'll it's going to attract. And when you get, somebody putting, a $65 price target on a $20 stock, it'll pop the stock. And you're seeing this trade significantly up here this morning on 30,000 shares. I know nothing about this company, but I'll tell you that, price target will, that the media picks that up. And obviously that attracts more attention to the stock. And that's why you see the big pop.
It is a pharmaceutical company based in Cambridge, Massachusetts, which aim to develop therapies based on CAS9 gene editing technology. So,
whatever the hell that means.
Yeah, that. And besides that, there was an old, what do you have here? You've cleared the two highs at 21 and change. So if you fall back, that could be support. Man, hard to find resistance. Maybe I'll throw one number out there, one number only. I know Dennis likes that. 2263, that is your 5-day high. And actually,
It's just slid
6-day
so
high.
far.
Yeah.
I'd be scared as hell if I was trying to short this just because it slid so far in the last 7 days. Now you get somebody put a $65 price target on it. This thing could have follow through. So I'm a buyer of pullbacks on EDIT. I don't buy it at $22 and chase it. But if you get a little slide, and sometimes you see this, even when stock gets upgraded, sometimes you'll see the initial pop, and then a few people 10 o'clock out taking some profits. It leaks back down a little bit. That's sometimes the best time to strike is around 10 o'clock on these stocks that are upgraded, because then you start seeing some follow through come in, and by the end of the day, so maybe some more institutions have come in there, and the stock is up significantly. So it's up too much for me to chase it here now. You got to pull back in the lower 21s. I'd get interested. Not sure you're going to see that today though.
All right, let's cover one more here before we bring in Nick Shaheen.
Okay, jump over here. Let's go. Where do you want to go? You took me by surprise here. I didn't know where to go.
TSRO.
Want to go TSRO? Let's go TSRO.
Yeah,
TSRO.
TSRO.
It's up 10 points here. Spencer's got the details.
Well, this morning it was reiterated, outperform by Wedbush, but the news came yesterday. They are expanding development, the development program for their cancer drug, niraparib. I hope I got that right. So the stock was halted after that news, and obviously up today. But they're expanding their drug program, which is obviously good news.
Stock is trading up almost 10 points here in the pre-market. Big lift last night there, Joel. Trading at 165.05, went out at 156.73. Well, you got about 30 seconds to give us a number.
So just all right. Only one number only. We'll go with this one. 71.80. If in fact you can clear that pre-market high, better hold in at 165 as support, or else I think back and fill. You want to bring Nick in on the hop here?
Sure.
Okay. Nick Shaheen, he's our Tuesday guest, and he's the author of Create Income with Option Spreads. Very
Good morning.
good morning, Nick. How you doing?
Doing great. You?
I wish that you would have sent your Tesla note over the weekend instead of last night.
Yeah. Did I send that last night? I thought I
What?
sent it earlier.
I read it last night.
Ah.
Maybe you sent it earlier. Yesterday though. Tesla bullish yesterday. Maybe 1240. So I guess if I would have watched an intraday, Nick, just give us your quick synopsis on this stock. So you did. You sent it during the day, so I had a chance. But go ahead, give us your scenario and why you're no longer bearish.
Well, the idea is, first of all, I'm not a Tesla bull by any means, but I used to be a bear to it as an auto manufacturer. And I thought that it needed several miracles in order for it to grow into the valuations that the Wall Street was giving it. So apparently, the people who knew it were right as far as it being or valuing it as a tech company. But now it became clear to me, at least, not being an expert on Tesla, that the prospects for it that everybody's excited about is not necessarily the car company, but rather what it can offer as an alternative energy company, probably is the best way to describe it. So it does have a future that's not tied to every car it makes, which kind of makes it not shortable. And almost, I don't want to say like Amazon, but Amazon was a growth company that everybody tried to short all the way from it when it was a baby to now, and they were wrong all the way. The only difference here is the cash situation between Amazon and Tesla. So yes, it has a great story to tell if it pans out. So you can't really short it with both feet. However, you can short the price action here and there. So if you zoom out on a move like this and you say, okay, well, can I buy it up here? No one can tell you can buy it up here with confidence, because we also have to the market in general is in range mode. You and I have talked about this before. So you can't buy it with confidence, because not only it's risky, but the market is risky up here. So what do? So, okay, can I short it? Perfect time to short it is on a pop to 280 again. So if I wanted to short it, I would use the long-term perceived value in it. So I would sell puts or put spreads against this long-term prospects that everybody's betting on. This way, I'm long Tesla that way. I collect some money to buy shorter dated puts. So if I wanted to short it through May, I'll buy a debit put spread near the money. I spend half the width of the spread. So if I buy a $5 wide spread, I spend $250-ish in order to buy that. And it can be free if I finance it with a credit put spread way out and way lower. And we're talking like in the 150 zone for next year, let's say January. And if nothing happens, any premium I sell from the debit put spread I bought for May would be profit, as long as Tesla stays above my sold risk way down in the 150 zone. So that would be the only way I could, try to short it short term, but I'm not shorting its concept. So don't start sending hate mail. I'm shorting the price action in it. But if it does break that yellow line area, the 280 area, 310 is doable. It's not crazy.
Why do you think there's certain stocks that valuation just doesn't seem to matter? Why do you think that's the case? Because obviously, I'd say the overall market, back in 1999, 2000, valuation didn't matter on everything. They were just buying every stock. I mean, Walmart had PEs of 50. It was crazy back then. Microsoft PE, Cisco had a PE of 80. It was just nuts back then. But, why do you think there's certain companies that just get passes on valuation? Because I look at Tesla and I look at it from valuation and I'm just like, no way, no thank you. Snap doesn't make any sense to me either, but it's early with Snap. Twitter never made any sense, and obviously Twitter's starting to make more sense here now from valuation, than it did before. But why do you think that the market just gives certain companies like Tesla a pass on valuation?
Well, this guy, Amazon, is probably the perfect example. Somebody sees something that the rest of us don't see. And somebody in Tesla saw something that the rest of us took a long time to see. In Amazon's case, it was just a pure growth company, and the guy had a vision, and he implemented the vision over and over and over and over and over and over again. So it's if somebody sees the potential and they can convince other people, and they sell you on the idea down the line, hey, this guy is going to do things. So the Bezos proved that he can deliver, and now he doesn't burn cash. He just reinvests his profits into keeping the growth alive. Everybody complained about how not profitable it was until they shut him up by turning profitable. I forget when that was. So they tell a story that's believable. And Tesla's story was not believable to me as a car company. But if you tell me, okay, it's got this and that and roof tiles and blah, 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 then I can, okay, I don't know much about it, so I'm not going to short it because at least I don't know enough about it. But I do believe in the people who believe in it, so I can leverage that knowledge. So maybe I'm not so much going long and bullish Tesla itself, but I believe in how strongly people believe in it. And I can sell the downside risk against that perceived value.
Let's jump over here into companies that do have value, and just looking at a stock like Facebook here. What do you see in the price action on something like this, Nick? Because it's had a big run, 115 to 140 here in 2017. So you're talking in 3 months, the stock's up 25 points on 115. You're up 20% here, at least in the last 3 months. And now you see a little bit of consolidation here, but this is another one that is loved by the street. What do you read in the price action on a stock like Facebook?
Facebook, it's one of those stories that I can see. I mean, if somebody tells me they have over 1 billion users, I mean, it would take some serious mess ups to mess that up. So it's one of those things that if you're going really long term, can you really pick a perfect entry point? But I prefer selling risk against value, and this is a perfect thing. Every time they hammer it, I sell risk against it on the downside. So I bet long whenever everybody hates it. So you can look technically that, it has skirted a nice higher low, and now it had a couple of hiccups, but the market in general, it wasn't Facebook specific. And I think there was a Facebook headline today about some camera thing. So now Facebook has a battle with the, so-called camera company. I don't think they stand a chance. Facebook will win that battle, at least it won't lose it. Let's put it that way. The company itself has value. So anytime Wall Street hates it, I love it. Kind of like Apple. It's one of those things where I wish they hammer it down, not for the people who are holding the stock, that'd be terrible. But if they do hate it, like if Apple, oh my gosh, can it please go back down to 95 and have people call 75 and 80 on it so we can reload? But in Facebook, if you missed it, wait a little bit. At some point, they'll hate it, or sell leap puts in it if you really want to own it. That'll be the best play on it. But it's, how can you mess up 1 billion users?
Nick, how about you were just going into Apple, kind of the opposite end of the Tesla here as far as the PE, trading at extremely low PE, backed off here, 142.31. Any comments on Apple?
Well, Apple, I won't comment on the value of the company. I do not like its management. I think he's ruining it a little bit at a time. He will eventually break it if nothing changes. For the short term, it definitely has value. And if I short it now, I'd be shorting the market in general. I would have a bearish macro look. And right here you and I have talked before, Joel, on the unusual candles that we've had in the S&P, how tight it was, and that was something's going to break. And it did break for like an hour yesterday. So Apple is the same way. If you look at the macro, if I can share, the IYT, the XLF, the IBB, Apple, they're all skirting a must bounce level for the short term as far as from a technical aspect, or risk losing a little bit. But that doesn't mean we're falling. I mean, the event can still take us to new highs, any event. So this market has been very bullish, has been relentless, and there's no fear. Yesterday, the VIX was red. It was green for a little bit. I said sell UVIXY call spreads, and I couldn't get the fill, but had I sold it, I could have booked it at the end of the day for profits. So I can't bet against Apple because it's got the macro theory. I mean, it's got the macro behind it. It's got the price action behind it. It's got the value behind it. But long term, I think they need to change their ways.
Nick, let's take you full circle. We started with, something that's got a crazy valuation, and we went into the conservative stuff, that's got a lower valuation like Apple. Let's go back to, something that doesn't have any valuation at all, which is Snapchat, SNAP, because it has no earnings. We don't know where it's going. Thing had a wild ride yesterday. A lot of, analysts, quiet period expired, analysts jumping in, giving a lot of, bullish ratings to the stock. Well, dust settling here today, and the stock is actually giving back all of those gains here this morning. I'm not sure if there's a headline here that broke about 20 minutes ago, but the rug just got pulled out from under it under 24, and the thing's in free fall here right now. It's at 23.13 on 1.7 million shares.
I just told you the headline, the new camera from Facebook.
Is that what the headline was? Is that just announced?
I bet it was.
When did they announce that?
Just about 40 minutes ago.
Yeah, that was on the Facebook newsroom site this morning.
Oh,
so
competition for Snap.
Well, my beef with Snap was I can't believe they labeled themselves as a camera company. That was, in my opinion, that would be their nail in the coffin. Because, first of all, GoPro's a camera company. Look how that panned out from a stock perspective. So then they pick a fight with the biggest thing on the market, which is Facebook. So how many people do you know have thousands of pictures on Facebook? Everybody I know that uses Facebook has all of their pictures on Facebook. Nobody keeps albums anywhere. It will talk about a what do you call that when people are stuck in the Apple infrastructure, and talk about being stuck in an infrastructure. It will take a huge effort of anyone to move out of Facebook with all of their pictures. So I think Snap has got a huge fight on its hand from Facebook if they keep sticking with this. They're a camera company. Yes, they're exciting, and I thought about going long it when it was a teenager. I just forgot, but I definitely would not chase it up here. They have to price action. If they dip, I'll probably buy some calls in it, but I wouldn't invest in it for my kids' education. Let's put it that way.
How about EK, Eastman Kodak?
Boy, they still around?
No, we were just talking about camera companies there, so I just wanted to get you on that one. Coming out of the chat here, a chart that I have been looking at all year and saying I need to buy it, and I don't buy it, and it's the biotech beast, Cara Therapeutics. I think they actually did come out with some good news today. Just hit 21.68 in the pre-market. Any comments on Cara Therapeutics?
Well, if they hit 21, I definitely would not short it. Technically, I mean, I don't know the news, I don't know the company, but if you eliminate the noise and zoom out to a 5-year chart, then you can see the potential upside. I would not short it. Let's put it this way. That's the best advice I can give anybody. Not because it can't fall, because it's just what are you banking on for it to fall? If it had good news and the news is sustainable, then you should use that as a base. So sometimes it's one of those too hot to short and too high to chase. So maybe pick a better entry point if you don't want to buy it on the spike. I'm not one to buy spikes.
All right. How about another little bit more conservative of a stock? AGN, one that Dennis put in his portfolio, and I told him not to take it out here. I don't know. I kind of like this chart. It hit a roadblock at 250, but seems to be regaining its footing. Any thoughts on AGN?
It is it's doing a lot better, and if it could get to 250, I know it's a long stretch. It could set a nice move higher. Actually, it's not a 250 zone. I'm not a super technician that way, but it is behaving well from a midterm perspective, not a short-term perspective. But I don't know what they're doing this morning, but I would get excited if they get above 245 for a super spike. So if they beat 245, 250, they can really take off from there, just on a technical basis. I don't know their fundamentals as much, so.
Did you know that Eastman Kodak is still around? KODK, Rob Hood. That must have reorged, eh? Because I remember Eastman Kodak went down, like went bankrupt, but it must have reorged and came back. KODK is still alive. Thank you, Rob Hood, for letting us know that. Might as well give us our technical thoughts. KODK while we're talking camera companies.
Hold
Still
on one
going
second.
down. I wish
Still
I would.
going down. It's
still
just
wish-
killing
I
the
wish-
debt holders now.
Oh man. Oh wow, those patents they had really turned out to be great. Anyways, Nick, your comments?
Let me double check. KODK. It's not pulling up. Hold on. Are you sure about that ticker?
AODK, yeah.
Okay, my platform
Came out
doesn't like it.
2014, so.
Oh, there we go. There we go. Oh, not doing very well.
No.
Yeah, but it's a
If
value
you could
zone.
bring up the chart before that, you'd actually see the ride all the way to 0, and then the reorg in 2013.
Oh my gosh. Yeah. I mean, what's there to say? Okay, on a range basis, it's at a place where it's found support, except one little extreme dip in when the market fell apart back February. So I guess if somebody knows its value as far as patent or whatever, then it could be an entry point, because this has been a 12 months or 13 months buyable zone. So, but I don't know anything about it and why it's falling. I mean, this is the fall was on high volume here recently in March, and persisted over 3 or 4 days and didn't get better. So yeah, okay, they've had one good candle yesterday on a bad day here in the market, kind of. So maybe this is a bottom and buyable.
All right, Nick. Go ahead, Dennis.
Jumping over here, Ed Parker's just asking about Alibaba, BABA, and we know this is one you follow very closely as well, and it's had a good run too. I mean, started 2017 down at 88 bucks. It's at 108 here now, so quietly it's tacked on 20 points. It's 110. I can remember this number back actually in July of last year. Could not breach this. I gotta think that is the level for this. And I looked in the book. I couldn't see anything there, but I'd imagine there's some big size kicking up around 110.
Well, Baba can really get to 116. I think I've written up a couple of times. I don't remember when was the last time. Just from a technical perspective, this is a company that executes okay. I mean, I don't, and I've made some money doing some credit put spreads on it. But I know now we've got higher lows, lower highs, coming to a point with trends that could break, inverse cup and handles, inverse head and shoulders, whatever you want to call it. There's several ones that kind of coincide. So I definitely would not short it. If you want to short it, you're shorting the markets in general, because it's looking frisky, as I would say, from a technical perspective. So something's got to give. And if markets just breathe a little bit higher, this one will probably breach 112 to 115, 116.
All right, before we let you go, well, two things before we let you go. Thoughts on Lululemon ahead of earnings?
Okay, I did a write-up on Lulu yesterday. They say that this is the retail stock, if you want to bet on retail. And I don't disagree. I'm not saying go out and buy it. I'm just saying that I looked at it, and technically from the open interest, the downside, as of yesterday, I didn't look at it today, the downside scenario is easier to happen than the upside, but it does have support. So there is a technical breakout potential on good news there. And it's not like it's a store that can be so-called Amazon. I mean, they have stuff. They are selling stuff that is theirs. So if it sells through them or somebody else. So I don't mind somebody taking a long shot on earnings, but I caution everybody, I remind everybody that the short-term reaction to earnings is a complete coin flip, regardless of the quality of the results, because we don't know how it is relative to expectations. So unless you're a complete expert on Lulu and you think you have edge on it, I'd make sure that my bet is, with small money, because it is gambling. Might as well go to Vegas.
And before we let you go, just market thoughts. Boy, stuck at the 2340 area. We discussed that over the weekend. You got your pull down, your rally right back to that area. So that's still my focus. S&P's this 2340, 2342 area. What's your focus here for the next couple of weeks before we get into Q1 earnings season?
Okay, I posted a chart, but it kicked me out to log in again. So let me go in. It is range trading, and you and I talked about these 4 funky candles, and so here's the range. I put it in a blue.
Nick?
Oh, no.
Oh, okay.
Yeah.
Sorry.
I'm here.
Think we lost you on our
So
end.
Yeah, no worries. And so we lost it for a little bit. We thought we were starting something scary, but we bounced off it. So I'm trading the range. I've got iron condors going with short leash. We will break out of the range soon enough. When, I don't know. What will trigger it, I don't know, and I'll be ready to react to it. But don't short with both feet. Don't go long with both feet. Be nimble.
All right, Nick Shaheen, the author of Create Income with Option Spreads, joins us every Tuesday to give us a well rounded fundamental and technical outlook on the market. Thanks a lot, Nick. We'll talk to you again soon.
Thank you. Looking forward.
Thanks, Nick.
Data slow leak here in the S&Ps, currently
Yeah.
sitting at the lows of the sessions. Do we get some sell imbalances that?
There's a few. There's a lot of buy imbalances here as well. So it's kind of mixed here this morning. I'd say nothing's really jumping out to me, except I'll give you a couple, highlights here. So Morgan Stanley, 88,000 to buy. That's actually going the opposite direction of some of the financials. I might watch that one because some of your banks are actually trading down here this morning. Snapchat, which we've talked about all morning, that's a big one. It's got 205,000 to sell here now. So SNAP, obviously some pressure, sounds like, from that Facebook headline that Nick had just talked about, putting pressure on the stock here as it's trading down over 60, or it's trading down 65 cents here in the pre-market. Other ones, they're all real small. AT&T, 50,000 to buy. That's somewhat of note, but Walmart's 47,000 to sell. That's going the opposite way. They're really small here, though.
All right, and I am just looking. The number we were talking about yesterday in Snapchat was the 50% retracement from the 29 area down to that 1890 low. And if I'm not mistaken, I don't have my calculator in front of me. I think the exact 50% retracement was 2470. Did you see what this thing hit in pre-market trading before?
After hour? Or pre-market this morning.
Yeah, pre-market.
Is that where it went, 2470?
2470. So hopefully one of our investors had their offer out there. All right, Dennis, you mentioned some of the imbalances. Morgan Stanley kind of going the opposite way, the financials. Any other ones that we should take a look at on the charts?
No, I just want to say, this is a tricky day. Like, you get these days where you're just down a little bit. We had a big rally there yesterday. I'm going to stick with the same theme. I'm cautiously bullish here today. So, we get a little pullback sometimes. You get those buy the dippers that might pull in here again. I think the rally yesterday caught a few people by surprise. Anybody who was short in the hole, like you said yesterday, on a stock like Bank of America is caught. And it's not down much in the pre-market. We're only down a nickel here. So, if some of these stocks get back up over their highs from yesterday, I'm going to jump on board with maybe if we can have a 2-day move where we get another nice green candle here on a stock like BAC. So, I'm cautiously bullish here this morning, but I want to see the stocks get above yesterday's high. So if you're trading them, that's my bogey.
All right, and just recapping a few stocks here. We had talked about, had some nice movement on Tesla after 10-cent holdings, 279.40. Not much above that if you're looking at the daily charts, but if you're chasing this, just keep an eye. You need follow through that pre-market high. Red Hat had some good earnings, got up to 86.88, and you know what? This thing really isn't backing off here. Really, it's been staying in the 86 handle, so I'd try and use that as a potential bogey. 86.88, that's your pre-market high. We mentioned CARA as got some good news on it. That's backed off its pre-market high. And just one more stock here, Dennis. We talk about some of the dogs being bought up, but one of those dogs that still can't seem to get a leash is Twitter here. A lot of consolidation at the $15 area. Piquing your interest again at all for trying alongside?
Somewhat. Not, in it yet here, but, watching it, cautiously watching it here. So I haven't struck on this one. I mean, I tried to strike once on it, and I had a little 20-cent loser on it, and I'm just kind of sitting back and watching. And, valuation still, like I said, I like the stock, but, I don't like the stock from a valuation perspective. I like it if it's lower. I had talked about the $14 level a couple of times, but that, it didn't quite get there. It got down to $14.32. That was where I'd bought it before and had some luck. If it gets back down to 14, I might try that level here again, but it's just not rallying, sometimes this can move counter to the market as well. So just because some SPOOs are down doesn't necessarily mean Twitter is going to be down. So always keep that in mind, but it's not really piquing my interest here yet.
Spencer, you want to introduce our special 9 a.m. Eastern Standard Time guest?
Yeah, we're gonna have one of our very own listeners and chatters, Bob Wire from the chat, is gonna be on in just a second. When after we take a break, actually, we're gonna call him and get him on the line and talk about his trading, how he got started, what he looks for. He's one of our more active listeners in the chat. So if you do listen to the show and you want to maybe come on, you can do what he did and just email premarket at benzinga.com, and we can maybe work something out with having you on our show. So we'll be right back right now with one of our listeners, Bob Wire.
Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by Benzinga Pro. I'm your co-host Joel Alconin, along with Dennis Dick and Spencer Israel, and we have a special guest on the line from the chat, no other than Bob Wire. Bob, how you doing today?
I'm doing good, you guys. I just want to let you know that in New Jersey here, it's raining cats and dogs.
Okay, all right, not too bad here. Well, Bob, give us a little bit of your background. Have you always been involved in the markets? Did you have a real job and got into trading to manage your portfolio? How did you end up to be one of the number one listeners on Benzinga's pre-market prep show?
My background, real quickly, I was a financial controller for amusement centers in New Jersey, which basically, I did all the accounting, the books. So I do have a partial for amusement centers such as Six Flags and Cedar Fair and Disney, things like that. And they have grown over the years. As far as trading, I've been in it for about 30 years. I've never been a professional. I wish I could be a professional, but I'm not. And right now I'm retired. I was in the entertainment industry for about 20 years.
Okay, all right. So, how would you define your style of trading? It seems to me you're a little bit more of a position trader, intermediate trader. I don't see you like in there, throwing 20,000 shares of Bank America around. How do you describe your trading style?
No, you're correct. Basically, I have two portfolios. One's just for investments, very safe, very conservative. And my other one, maybe 25%, I do like swing trades, day trades, and like you just said, something like Bank of America, I might buy 200, 300, 400 shares, nothing huge. Anything that's a swing or a day trade, and I suggest this to anybody, don't, you know, don't throw all your money into it. Put a small portion. If you can lose it, you can lose it. It's gambling money.
Okay. All right, and then let's describe your method of analysis. I mean, are you a core fundamental guy? You comb the the press or the media or do your research, you look for fundamentals, and then you turn to the charts, or would you say it's the opposite? You like to see technical formations and then make your act and maybe pay a little attention to the fundamentals?
I would say it's the prior, Joel. I usually look at fundamentals, news, and then I'll look at the technicals. I'll follow the SMAs, the 20, 50, and 100. And then I like to do the Fibonacci, like you talk about, the 50 and the 61.8. And usually, play off of that. Like Dennis was talking about edit this morning. I'll watch that today. I'll watch it and see if it, like he said, I doubt if it's going to go back to the 50, but, I'll see if it drops and maybe take it long for a bounce.
Okay, and also, I mean, I've noticed that you also take an interest in the short side, and for a retail trader, that's a little bit different. I mean, great bull market, a lot of bias towards the upside. Are you just like trying to keep a balanced portfolio there, or you've had more success on the short side? How do you become such a well-rounded trader?
I think it's kind of everything. I'm open-minded, like I keep saying in the chat. So I'll go short if I think, I like to look at things that pop. If they pop in the morning, and like you guys always say, it's too hot to, was it too hot to go long and too high to go short, something like that.
Yeah.
And I like to, but if it goes 5, 10, 20, 30%, I hate to go long. So I'll keep an eye on the short side. And, I have no problem shorting something. Like I said, this is pretty much in my short-term trading portfolio, let's call it that. And if I lose it, I lose it. It's, it's money that I'm willing to gamble. And I would just suggest to anybody that if you're a beginner or whatever, put 75% in a conservative portfolio. Don't go all crazy with these day trades or swing trades because you're going to lose all your money. I mean, these dollar stocks that everybody jumps on, yeah, you can make a ton of money, but you can also lose a ton of money.
Rob Hood wants to know, do you trade every day, and how much time do you spend in front of your computer?
I trade every day. I don't try to sit in front of my computer all day, but I like to look at the news in the morning. I like to look at the morning pops, and I'll go in and out. I probably spend 3 to 4 hours a day and just look at stuff, listen to the news. I know a lot of people on different chats say don't listen to the news. I listen to the news. You have to take everything with a grain of salt in this world. Listen to the news. Don't jump on something because somebody says this is the greatest thing in the world, like some of the media does. Use your own judgment.
And what about your information sources besides Benzinga's pre-market prep show? Do you have other news sources that you rely on?
As far as internet sites, I am on StockTwits, and I do I'm on Twitter. I like to look at a lot of internet sites, like you said. I like CNBC, NBC. I have TD Ameritrade, and I have E-Trade, and I have a few brokers. And I would recommend to anybody, don't just use one broker, because if it gets shut down or closed down, you're stuck. So I would recommend using at least 2 or 3 brokers.
And do you have a final story or a final experience that's kind of shaped your impressions of the markets, either from a long-term investor or from the shorter-term trading that you've been doing?
I think one thing I've learned, and it's really hard to do. I think it's pretty hard for any investor trader, is to cut your losses, because it's hard to say you're wrong. It's just flat out hard to say. And so many times I've sat on things that I've, been underwater, and I just sit on it and sit on it. And I don't know if it's right or not. I don't think there's any rule that's right or wrong in the stock market. It's sometimes they say cut your shorts early, but sometimes I've done that, and then it comes back and bites me.
Okay.
And the one thing I just want to say, as far as what along the same lines, I try not to trade earnings and after hours, because, like you guys always talk about, the liquidity is just so low that you can really get burned.
And what's your stock twits tag?
What is my stock twits? It's Howard Wire.
Okay, Howard Wire. Okay, and just before we let you go, what's on your radar for today? Any longs or shorts in particular, or any something you're looking at probably as maybe a longer term investment?
Well, I did mention banks, BAC, and I like it short, but it's a crapshoot. It really is. I just believe that banks have come too far too fast.
Bob Wire, a frequent listener to Benzinga's pre-market prep show, sharing his background and his trading style. Bob, thanks a lot. Appreciate your input in the chat, and we'll have you on again soon.
Thanks, you guys. I appreciate all your info, and I appreciate everybody in the chat. I think everybody's great.
All right. Spencer, you want to wrap things up?
Yep, got a couple guests on the docket for tomorrow. Ben Axler, I think, is coming on. I hope he's the Spruce Point Capital. He came out with a short report last week. We're going to talk about his latest short. Also, we're going to be joined by Tim Melvin of Banking on Profit. If you love your bank stocks, Tim is your guy for that. So hope you enjoyed our show today. Hope you enjoyed Nick and Bob Wire, and we'll be back with you folks on Wednesday.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.